Hello, guys, it's Gandalf here for another weekly market update. So let's get to it. What we'll talk about today, we'll just review the indices like we usually do. I'll talk in depth about the stock market sectors within the S&P 500. Have a look at what's happening there, which ones are leading, um, and which ones are lagging, and that can give us an idea of which stocks we should be trading for in the short term and which stocks we want to be looking at for picking long-term entries. So let's take a look at that, and then as usual we'll look at crypto, which is also very interesting as well. So S&P 500, let's take a look. Our impulse wave here, we are still straddling this kind of resistant trend line. We had this breakout area here that we identified. If you bought this dip, or this breakout, you're doing extremely well here, holding on to stock, holding the right type of stocks, I would say. Not all stocks are participating in this rally, so some of you may have suffered from that a little bit. Next area of resistance is this, I'd say 4,300 area. We'll probably test this upper kind of resistant trend line. Looking at these kind of three bullish candles, this volume, it looks like we're squeezing again. And this was always an option, right? We could just straddle this resistance, just can't continue just going up and down at this kind of trend line here, and just continue to grind higher. If you didn't buy these areas, if you're looking at swinging for a couple of weeks or a month or so, then it's extremely dangerous to buy up here. So if you didn't buy here, then day trade only up here. If you have positions from here, then you're all set. You can kind of hold those positions and look for upside targets that you're looking for. So again, like I said, risk reward is not favoring you to enter swing positions here. It's a day trading market only for me. You could have bought this dip. So last week we did have a dip at the early part of the week down to support, and this was the support that we made, and we kind of retested it. There's a lot of demand there, you can see, and immediately pushed to new highs. So you could have bought there, and in fact, I did actually pick up some stocks here. Ones that have been beaten down, ones that I've been looking to own anyway, like Pinterest, for example. I saw a good opportunity to get into that stock. So you could have bought some here, but that's your kind of our next level of support now that we need to track. And it kind of matches up to a trend line here as well. So kind of squeezing in prices as well. But, like I said, where risk reward does not favor us, I still think that we'll get opportunities to buy stocks at cheaper prices. I'm looking specifically at this breakout area here. Hopefully that kind of holds when we do get a downward movement. But next support is at 38.50, and then below that is this 3,700 area. So that's where I'm waiting. I've got a lot of cash. I'll be piling into stocks around these prices. So just being patient. And like I said, it's a day trader's market right now. So I would recommend trying to trade each way as well. So once you hit these resistances, look for some puts. Once we get back to supportive prices, then you can pick up some day trades to the upside. So just play the, just play it safe, and put in these trend lines, maybe look at some Bollinger Bands. The market is not going to go wild. It's not going to rocket ship, past this resistance. It will be range bound, right? So just bear that in mind. When you go overly bullish at this area here, it's just not worth it. So just keep that in mind. But one thing I did want to talk about is the sectors in the market. So let's just rearrange this. So what I'm looking at here is each line represents a different sector in the market, an ETF that tracks that sector. This is just comparing in terms of percentage of where we start on the left. So let's start and look at each of the sectors from the bottom of COVID, right? So let's take a look at here. So this end of March was the COVID bottom. So this is the entire bull market. Let's take a look at the sectors. and look at which have led, which have lagged. So the S&P 500 is up around 90% since the COVID bottom. So the sectors that have outperformed, the leading sectors, which this might surprise you, is the energy sector, the XLE. The XLB is the material sector. XLI is industrials, and the XLF is financials. These are cyclical stocks. The cyclical stocks are ones that track the market business cycle. So they tend to outperform early in new bull markets. Towards the end of bull markets and during recessions, they get absolutely crushed. But this kind of makes sense. This is the start of a new bull market, and these cyclical stocks have massively outperformed. The ones that have underperformed are the defensive sectors, so the XLV, healthcare, the XLU, utilities. These are the sectors that have massively underperformed. Look, the S&P is up 90%, the XLU is only up 45%. So this is quite useful information. This is telling you which of the stocks that have short-term momentum. And if you're day trading the upside, or you're looking to make upside trades in stocks each day, these are the sectors you need to be looking at. You need to be looking at the financials. You need to be looking at the industrials. You need to be looking at energy and materials. These are the ones that have a lot of momentum. And you'll see that technology, the XLK, is pretty much flat with the S&P 500. You're not really gaining any more trading technology stocks than just trading the S&P 500. Yes, the technology, which had if you look at the early part of this bull market, the XLK at one point was, by the end of August, massively outperforming everything else. But since then, it's lagged, and you may want to look at some of these sectors in the short term. In the long term, however, I'd be looking here. So what tends to happen in a bull market, cyclicals outperform early in the market, but at some point it'll switch. At some point, these will have moved too fast, too hard, too much, and funds and smart money will start to look at where's the value in the market, and the value is here. It's in utilities, it's in healthcare, consumer staples. These are the areas that, for long-term investors, I'd start to pick at these areas. Maybe slowly sell some of these areas and start to think about a year down the road when these look to catch up. Eventually, these sectors will catch up and these will drop. We will end up at the mean. It always happens. That's how bull markets always go, right? Late in the cycle, these will catch up. So that's what I'm going to start looking at picking up some utilities. There's also, not in this list, but REITs as well. That's down here as well. So start to look at that, and that can gear your portfolio. Another interesting thing as well is to look at this current impulse. So I like to track impulses in the market. It gives me an idea of where we're at in the cycle. And this was the first big impulse in the S&P 500 from the March bottom at the end of, like I said, the end of August. This is where technology massively outperformed. We had a consolidation, and then we had at the start of our second big impulse. And that started at the start of November. So let's take a look at the start of November. Let's just narrow this down a little bit. Okay, so let's just move this to the start of November so you can see November starts there. Let's take a look at what's happened in just this impulse. And this is really interesting. So the S&P since the start of November is up 30%. This is almost like the Biden era, really, when Biden got elected. The S&P 500 is up 30%. But energy, quite surprisingly, has underperformed. It's down. It's not energy. Sorry, technology is underperformed. It's only up 25%. Again, these defensive sectors have lagged as well. But some of these cyclicals are up huge. I mean, the XLF is up 60%. The XLE is up 90%. So these have run hard. So it's worthwhile taking a look where the momentum is in the market. Let's take a look at these sectors in a little bit more detail. So maybe let's take a look at the XLE and see how much upside we have potential left in these kind of crazy momentum sectors. So this is a look at the XLE. 2014 is where oil peaked, and ever since then we've been in this mega bear market, first impulse of the bear market, and second impulse, and we've bottomed. made a lower high here, and then we've kind of kicked on from that lower high. So we hit this resistance here last month, but we've kind of dipped back to this previous peak here, and we've kicked on again. So if we break this high, I think we're going to test this trend line up here at around 63. So what kind of upside potential is that? Let's take a look at our price range here. So from where we're at right now, there's potentially 15 to 20% upside left in the XLE, so the energy sector. So there's still quite a way to go. So if ES does continue to push higher, kind of grinds higher, I think you're going to see in energy a move 15 to 20% higher as well. Interesting. So let's look at the XLF. So financials here. Again, the financials, this is where we peaked in 2007. This has been a major resistance. This is a 14-year resistance. We hit that again in 2018. Hit it again in 2019. We hit it again this year, and we've finally broken out. So we can take a look at this last, this kind of area here, and let's just map that high, and that gives us a potential target for this breakout. So we're looking at around 43 for this breakout, and this is different from the XLE. We've broke a new high, so we're in kind of price discovery here with financials. We've got this resistant trend line, so 43 looks like a potential area. Again, that's around 15%. That kind of coincides with the XLE as well. So maybe 15% higher in the XLF, 15% higher in the XLE before we hit some big resistance. And these are the sectors, like I said, that have short-term momentum. It's where you want to be day trading. The upside moves each day until we hit these kind of resistant areas. So that's kind of what I'm looking for in some of these kind of bullish areas of the market. And hopefully that's useful and gives you an idea on how to look at the different sectors, make some analysis on where the momentum is. This gives you an idea of where the value is in the market as well. So hopefully that was useful. So that kind of summarizes the stock market. Let's take a look at crypto. So Bitcoin. So I think over the last couple of weeks I've told you I think this is a peak, maybe a peak for a while, 65k. I don't see us breaking out of that anytime soon, not for a while. I think we're going to range. I also think this 42k area is a bottom as well. It's a lower end of the range. I don't see us going anywhere lower than that for quite a long time. So in my opinion, we're in this kind of range. And we're approaching the top of that range. So I'm, again, still cautious. I do think it's inevitable, though, that Bitcoin hits this green box area. So this 61k area, it's a previous peak. We did find some resistance here, which was an area I flagged last week. Found some support, built this trend line, and I think we're going to push to this next resistance. So again, alts have been pretty wild over the last week or so. Some alts have mooned, some have not. We've had Doge as well. So it's kind of I'd say the market right now is an altcoin picker's market. So if you can pick the altcoin that's going to break out next, you're going to do quite well. So look at people that are predicting these breakouts, are able to track them. It's a kind of collective effort to try and find these altcoins that are next to break out. But once Bitcoin gets up here, I think you start to become extremely cautious again, and maybe you want to hedge your portfolio of crypto by taking some shorts on some alts to kind of hedge, because I do think we start to head back down to the lower end of this range, maybe around the 50k, 51k area. It is possible we could head to the 40ks. I think it's unlikely. There's just so much demand in the crypto market right now. I just can't see it. Ultimately, I do think we break out higher to 70 plus k in maybe the second half of this year. But for now, we're in this kind of range. So play the range, and when we get to the lower part of this range, go big on alts. When we start getting up here, go light on alts, right? So just play the range. The alts that I'm in, again, no changes. I'm still in ETH, still in Atom. I still like Atom here quite a lot. Still in Solana, holding this long term. Still in HBAR. An alt that I think is interesting here is Litecoin. We kind of broke out of this previous all-time high from 2017, potential price discovery. So usual price discovery type scenario, we make a big push higher, we dump, retest, and then we break higher again. That's kind of how it happened with Ethereum as well. You can see here we broke out this all-time high, dumped, and then broke higher. So expect something similar with Litecoin. But looks to have just broken out. That looks interesting. Nothing interesting in Ripple. Doge. I mean, look, just my opinion on Doge is if you're serious about crypto, just avoid it. Don't even look at Doge. It's in my opinion, it's a coin that continues to remind you, and it kind of in my opinion, it's my main worry about crypto is coins like Doge, and it kind of delegitimizes the crypto market. It's a great story. It started as a joke, and it's got a huge backer in Elon Musk that's trying to pump it up. But ultimately, this is a joke coin. It still is a joke coin. It's a terrible technology as well. It's going to have no real use in the world. So you're buying it purely for the hype, and I don't blame you. This chart looks incredible. I mean, look at the momentum that we have here. This steep trend line. So this could easily hit $1. Easily buy that dip if you like. But just remember what this coin actually is, and it's not something. If you start to see supports break down, it's one that you want to get out of and go into better projects. Have your money in Ethereum. Have them in Solana. Right, these are real projects that are going to have long, lasting impact on the market. So I don't want to give you too much Doge hate, but yeah, if you're serious about crypto, I would avoid Doge. Lastly, let's take a look at Bitcoin dominance. So we broke out of this level. We've had the incredible alt season. Bitcoin dominance went from 60 all the way down to 45. So a huge move. We're at pretty extreme levels here now. So I wouldn't be surprised if we saw Bitcoin dominance bounce. And that can happen in two ways. If Bitcoin makes a huge movement to the upside, that looks unlikely. We only, I think, have a few percent higher in Bitcoin, in my opinion. Don't think we're going to make any new highs anytime soon. So that means maybe when we get up here, we have a downward movement, and that may be what causes the Bitcoin dominance to bounce. So again, be cautious. Keep an eye out on when Bitcoin dominance starts to break this down trend line. When we start to break this higher, when we make some higher lows, be a bit cautious on alts here. But for now, it's an alt pickers market. So continue to look for the opportunities, and these alts can really move. So, yep, I think that's it for this week. Just lastly, before I end it for this week, if you found some of the material interesting and you find the material interesting in these videos, we do have on the simberstocks.io website, there are courses that we offer. One from myself, the long-term and swing trading course. There's also from other admins, Fong, the in-depth technical analysis course as well, and Brett's day trading course, which is coming soon. So I encourage you to take a look at these courses. What I just talked about today in terms of sector analysis, I go through in a lot of detail, as well as just general kind of giving you an overview of fundamental analysis, everything that you need to know to be successful in looking at fundamentals of stocks in the market, growth stocks, value stocks, dividends. We'll go through it in a lot of detail, as well as technical analysis on long-term stocks, with some examples of how to use TA and fundamental analysis together to make some decisions. And we'll talk about portfolio management. So I encourage you to take a look at these courses. Well worth the money. Lots of great reviews. Read some of these reviews from other persons that have taken this course and enjoyed the content. So I encourage you to take a look. And that's it for me for this week. Have a safe week trading.